maybe I should tell you a bit about myself. I've been working in impact investing in various ways in East Africa for over a decade, and so I've learned a lot in that time about the thousands of ways, really, that you can have an impact as an investor, and in the private sector and financing the private sector. So I just wanted to share a bit with you all today about what I've learned during my career about sort of setting an impact strategy and having an intention. If you decide that, you want to have an impact as an investor, or maybe you're a philanthropist and you're considering becoming an investor, and want to continue having an impact, but thinking about how you can have that impact in different ways. I think when people talk about impact and impact investing, a lot of times they talk about measuring impact after it has happened. And they talk maybe a little bit less about how you set a strategy for what the impact that you want to achieve is from the start. And so when you're thinking about your investment thesis, a lot of people consider their financial return goals. We should also consider impact return goals from the very beginning. And so I borrowed this this way of thinking about investing for impact versus investing with impact from EVPA in Europe. They've done a lot of work on impact strategies recently, and they say that as an investor, you can invest with impact, which is really a focus on things like responsible investing, corporate sustainability. You see, like a lot of big PE funds in Africa work this way. They look at environmental and social governance. Makes sense building better businesses through looking at responsible investing and how that aligns with your financial return expectations. You can also invest for impact, which some people call this an impact first versus a finance first kind of way of thinking about impact. Of course, it's not black and white. It's not, there's a lot of gray in between these two. But you can think about, people who invest for impact. Impact is really foremost in the decisions that they make. And often they're willing to accept higher financial risk if there's a higher impact potential. It's not always a trade-off. You can have financial goals that align with impact goals and not have to sacrifice one for the other. But it is something that you need to think about because different companies offer different financial returns and different impact returns. And so you see a lot of people who are really intentional about investing for impact, like Acumen Fund, LGT Venture Philanthropy, um, focusing on social innovation, on providing very long-term patient capital that might delay their financial returns, and really focusing on the impact that they want. And none of these approaches is better than the other. It's just good to be conscious about how you want to think about having impact in your investing. So the question you can ask yourself, as you're thinking about this is who do you want to impact and how? So the who is, do we want to impact women and girls, maybe poor families or farmers? Maybe you're just interested in having an impact in your local community, or a lot of angel investors end up investing in an industry that you've worked in yourself in the past that you care about and you want to see that industry grow. Maybe it's the environment. But it's good to think about, what is the impact that you want? And if you, I would really like to impact poor families in my community. Well, how? Like, what kind of impact do you want to deliver to them? Jobs and income opportunities, healthcare, education services that they might not have otherwise. Do you just want to see a specific industry develop? So you can think about these different aspects of impact. And then how do you want your impact to play out? Do you want to impact a handful of people in a life-changing way, or do you want to impact millions of people, maybe in a marginal benefit kind of way? And that's what this little graph is on the right. If you think about, the benefit that you can have to the people that are impacted by your investments. I've seen a lot in our work when you look at things like sourcing from smallholder farmers, providing extension services to them, working with them closely, developing them, giving them access to markets. It's very intensive work, and it's often hard to scale that in the same way that perhaps introducing like a mobile money solution to the market would be. On the same side, though, you might change a smallholder farmer's life by engaging with them in that way, whereas mobile money is providing more of a marginal benefit to millions of people. And then you get, something like off-grid energy, maybe somewhere in the middle. So these are big questions that you can think through and be intentional about when you're selecting the companies that you want to invest in. Um, there are all these different ways that you can have an impact, but it's good to know kind of what your goals are from the beginning. And do you want to see that impact immediately, or is it a long term play? That's the last question on the list. And that one's also a really important one because Looney will talk later about impact measurement. And a lot of people look for these big numbers. I've impacted 1 million people within 2 years or 5 years of my investment. But then maybe there's a company out there. I worked with a company once that was introducing pension funds for low income clients in Rwanda. And they were literally building an industry from scratch. And their impact numbers were going to look terrible for like 10 years because they were starting from nothing. But if they actually changed the way that that market worked over time, that would have a huge impact in the long term. So you can think about these things in different ways, but the most important thing is that you're thinking about it before you make your investments, if this is something that you care about. So which companies then, I mean, this is the next question, right? You say, okay, this is the type of impact that I care about, that I want to see happen in the market. Well, which companies can achieve that impact for you? If you're looking at investing in a company. So these are just a couple of examples of companies that I've worked with in Kenya. And they all have very different types of impact based on the types of companies that they are. So Tiny Totos is a small social enterprise that works with kids in slum daycares in Nairobi, changing the lives absolutely completely of those kids and their mothers. Penda Health is a healthcare company, a private healthcare company that provides services to 250,000 patients a year, which is amazing. Really been able to scale those services because it's a for-profit company as opposed to a nonprofit healthcare provision. So really exciting to see like how they can scale and expand with their investment. And then a company like Pula was just raised a Series A, also based in Kenya, but they work in 11 countries. They provide agricultural insurance to farmers. And they've reached 4.3 million farmers because of the way that they structured their business model. They work through input suppliers. And so they're able to reach and scale very quickly. The impact that they provide to each individual farmer is probably less than different types of models that other agricultural businesses might have. But over time, they're also transforming the insurance industry. So, lots of different examples of how your investment into different kinds of companies can really result in different types of impact. And I think if we don't think about that until after you have a portfolio, then you might have sort of scattered impact or impact that is maybe not what you had imagined when you were going into your investments. And so I think it's really important to be conscious and intentional about how you make those selections, how you build your portfolio to align with the impact that you want. And then the last point I'll make, last one on this, Looney, is just I've seen so many businesses that are taking capital from investors who say, we want you to have this impact. And then their business model inevitably will pivot into something else that is less relevant to that initial impact. And so is what you are seeking in terms of impact really core to that business model? That's probably the number one most important thing to think about when making an impact investment. So I will stop there